Happy Friday, everyone. It is 8:03 a.m. Chicago time on the 22nd of February 2019. Another week is done and over with. I cannot say that it was a very excellent trading week, but here we are. Time keeps ticking. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market sentiment uh, is risk on again today, despite yesterday's close. I mean, yesterday's rally on the close in the S&P and across the indices was interesting. Yesterday's action um, looked a heck of a lot more like it was the rounding of a top than it did like than it did look like it was going to continue rallying into the overnight session. Nothing outstanding has taken place overnight. Um, the negotiations continue between the U.S. and China. A few hurdles here and there. But the deadline for these negotiations was supposed to be next Friday before tariffs double on Chinese products. But the U.S. president has already indicated that that deadline is not a magical number, and it could be changed if negotiations are continuing. So I'm not sure. I feel like the sentiment in the market is very, very lukewarm to everything at the moment, so it makes for a tougher trade. As far as with the lead, you know, OPEC keeps working on tightening supply and controlling prices. It's a cartel, and that's what cartels do. Um, and so oil has had a pretty good pop higher over the last week or so. It's trading at 57.72 on the April contract, up 75 cents or 1.3%. That's followed by the DAX. Oddly enough, the U.S. Treasury bond is up 19 ticks, 0.41%. It's up more on a percentage basis on the futures than any of the U.S. indices. Quite strange. Um, and then the laggard today is the volatility futures, the pound, the Japanese yen, and the euro. So that's where we stand currently. Looking at the calendar for today, the big release today was the German IFO came in slightly lower than expected, still indicating that the German economy is slowing down somewhat. Core inflation came in line for the Eurozone, and the inflation rate month on month came in just slightly stronger than consensus at -1% versus -1.1%. Today we have a lot of speakers. We had a speaker at 8:15 Eastern. We have a speaker coming up at 10:15. Feds Williams at 10:15. We have President Draghi at 10:30. We have Feds Clarita at noon. We have Feds Quarles at 1:30. We have Feds Harker at 1:30, and we have Feds Williams at 4:30. So a lot of it's the Fed parade today. So I'm not sure how much that's going to impact things. I don't know that the Fed could do anything right now different than what was already announced. That they're going to be patient and take a back seat to the increase in interest rates. So the market's already factored that in, unless something really unusual is said by one of these people. I don't think there's much there. So today, not really expecting any magic. Let's take a look at what was expected yesterday. Yesterday, the primary scenarios that we're likely to test lower and then push up into the point of control and hold steady in the 27.95, no, 27, whew, 27.85 area. The secondary scenarios that we're likely to skew down and then push up and then potentially push higher and this is because of yesterday's fairly balanced day. The FOMC minutes caused us to push up and down and finish on the strong side, and we were opening below down here at 27.7950. So the expectation is if we don't see any interest lower, I'm expecting it to grind higher, and 2800 would be the target. The third scenario, which was the better trading scenario, is to test up, unable, and then to push lower and push through the 73 low, and then attack the 66 low and into the gap, which is somewhat of what happened. Um, there was really a very poor attempt at pushing higher early. It only got to about 80.50. Remember, the expectation here is it's likely to push up on scenario 3 and then find sellers and push lower and break and then aim for this gap. Instead, it pushed lower, so it looked like scenario 1 or 2. And then, so I was looking for it to mash its way up towards 2782, 82 quarter, which was the overnight point of control. There's about an 85% historical probability that we would touch the overnight point of control in the day session. We stopped 2 ticks short of that, and then we rolled over and pushed. Once we pushed through the IB high, we rolled over very quickly and pushed through the IB low, and then finished in the middle. So another neutral day here, neutral day here, and this looked like it was rounding a top in the S&P and is likely to start exploring lower. This morning's action clearly negates that. We pushed to 2787.75 in the overnight, and the point of control is at 2785.50, and we're just below it and above yesterday's range currently. So a tough read in any case. In fact, I'm as I told Convergence members yesterday, I'm looking at other products, namely the Russell and so on, to see if there's more consistent action. There's just, if you look at the S&P and look at the rotations here, this is a 2-tick Renko chart. If you look at the rotations, I mean, it's just a lot of this, right? Just massive zipper areas. This whole area is a zipper, right? And then it zippers up here, and then it zippers down here, and it's just, it's not clear. The volatility has dropped off a cliff. I'll show you the graph of volatility. I posted it last night on the Convergent homework screen. Oh, what's going on here? I'm just reloading it. 1 second. In fact, I might have it here. Boom. Let me show you this. So that's the 20-day historical volatility on the RTH close. So this is measuring close to close volatility, and you can see that it's just falling off. I mean, this stuff here was still pretty good. Remember, this is a lagging indicator. It's 20 days. It's looking back 20 days. So it picked up really well and has fallen off and is starting to make new lows over the last 3 months or so. I have a lot more data than this. I could chart it back to the beginning of last year, but it's pretty steadily falling off, and that's what we're seeing. There's a lot of choppiness, indecision, and so on. So that's where we are. Looking at the overnight, what have we done since we reopened in the session? The overnight session really dead through here, and then we start to drift higher. The IFO came out around this area here around 3 o'clock. The market actually rallied on that poorer number, and we pushed to the high, very poor high in the overnight session, multi-pronged, volume is pretty much in line with what it would be considered normal for the overnight session, 175,000 versus about 160,000. Historically, it's about 100,000 to 110,000 contracts traded overnight. So there's a lot of price discovery going on here. And so you know, the market's just indecisive. Both sides have an incentive to be participating in this market. The thing to note yesterday was the way the relative delta operated. If we look at the relative delta for the session, we again see that the large lots, the yellow, are sellers or very large lots. These are 100 lots or greater, while the intermediate participant, which I'm putting at 10 contracts per tick to 99 contracts per tick, were positive, with the small lots holding to the positive side, but ending flat on the day. These are 9 lot ticks or less. And as we, as you know, the 0 point of the relative delta is equal to the open of the product. The 0 point starts at 8:30 in the pit session in Chicago, and that's the opening price. And you can see that the delta, this is the delta, these bar graphs, you can see that the delta is kind of moving with price. But it's dominated to the downside by very large lots. We're seeing a lot of activity. I mean, there was a really strong trend from the size sellers, and we see that even in our volume scope. Let me just switch this. We see that in our volume scope or footprint in the morning. Let's go back to the beginning of the session. All right. Whoa. Hang on. I lost that chart. Let me pull up that chart again. I'm sorry. Hang on. Not sure what happened to my volume scope chart. It's just disappeared. There it is. Okay, so let's move forward to 8:30. 8:30. There's the pit open, and watch this. Watch this. These are the very large lots right here. Okay, and you can see their activity, which side they're on, and so it's back and forth, back and forth. And as we push forward, you'll notice more negatives. See that? Negatives right there. So size was selling early on, and as we pushed lower, and they continue to do so. So you can see that the reds, a little bit of green, red, 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 green, red, 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 green, red, red, like that. And that was, pretty much throughout the session. But the point being that it's a little bit more disjointed than I would normally see in terms of the order flow in this product. Anyway, let's move on. I'm kind of getting out of control here with what I'm going over. So let's take a look at what we're expecting for today. So the overnight session left us with a weak high with a clear low volume node at 2779, where VWAP and mid are currently residing. Before we get into today's plan, let's take a moment and just find the like button and hit it, please. It's like Friday, and if you don't see it on your screen, then find the YouTube page and hit that like button for me. I'd appreciate it. So what are we looking for today? Today's pretty straightforward. We do have, I reviewed the overnight session to see what we've got. We do have a weak high in the overnight. I'm expecting an open auction. Again, we're in this bigger zone. Let me draw that zone. Whenever we have a gap up and sideways, we have basically a micro composite. Okay. So you look at the microcomposite and you see that it's pretty fat. It's it's quite fat. It's trading the same range for quite some time. This morning, the expectation is for an open auction. I'm looking for reversion back to yesterday's an open auction. The primary scenario is it pushes up into the overnight high, gets into the 88, 89 area, and then I'm looking for it to revert back to 81, 82 and drop into the range and potentially tests this 73, 74 area below before it pops back out later in the session. I'm not expecting too much. It is a Friday, but overall, that's what I'm looking for. Secondary scenario is an open auction that pushes down into 81, 82, attempts to hold the prior day, impulses up, pulls back to the prior day's high, and then starts drifting up and then taking out this 90.75 that we put in on Wednesday and starts on its way towards 95 as a target. The ranges have collapsed, so it's 2800 is probably not in the cards today. Be interesting if it were. I would expect a lot of noise in that area, but it's in general it's either going to be a reversion type trade where reversion we are responsive back into yesterday's auction and the MC point of control, or we are initiative. In other words, we test down, we see that there's not much interest to drive prices lower, there's interest to buy, and then we turn around and start pushing through the last high we put in. The last high we put in was actually, I talked about this yesterday, was actually fairly solid, okay? There's an excess high here, classic excess high from about 87 up. So once it breaks above 87, caution shorts. It is likely to take out that 91 and continue on its way to 95. Why do I think that? Very clear. 87.50 right there, 86.75, another test, and it so on and so on. And it's just not able to sustain prices above there on that FOMC. It poked through on the FOMC, fell back through, retested. It tested that high in the morning. So this area represents this excess area right here in volume. It's showing very clearly the prices for the participants under the current conditions are too high. Once we push into an excess area, it's basically a set of single prints. Once we push into an excess area, we're likely to push all the way through. So that's why I'm saying if it pushes above 87, caution. Although that 86, 87 area on the first touch, this overnight high is likely to give us at least a 3-point rotation back down before it continues, if it's going to continue. So I'm going to take a stab in that area if it moves up and it's not an impulse or a rush from the open. Okay, that's what I'm looking at. That's what I'm planning. Again, hit the like button, please. Take care, and don't forget it's Friday, so it's not the best day to get all emotional and stuff about your trading. Keep your head on straight and mind your risk. Our goal, first and foremost, our goal is always to make money, but we can't make money without having money. And so our most important goal always is to survive, because if we can't survive, we can't be here tomorrow. So do not put on a trade and just manage it all day and give up your entire account. It's just a silly thing to do. And Friday's one of those days that kind of sucks you in to do that. Good luck, and I'll catch you well, not tomorrow, but Monday. I won't be here tomorrow. Good luck, everybody. Have a great weekend. Take care.